It's time for our weekly market monitor who likes companies he says are not just leaders in their industries, but are names that will hold up in an economic downturn. Joining us is Matthew Roddy, portfolio manager with Rockland Trust. Welcome back. Nice to have you here, Matt.
Thank you for having me, Sue.
So these are leaders, but they're a little bit of a downturn hedge, I guess is the best way to put it, because you say if things disappoint, you want these names. So let's get to the first one, which is Raytheon. Why do you like it?
Yeah, so Raytheon is a company that obviously is not going to be beholden to the business cycle. Actually, the defense industry has been a growth industry, growing above inflation for the last 15 years, and that's accelerated recently. And they're in the right verticals with missile defense and cybersecurity. I mean, I think we've all heard the stories of hacking and electronic surveillance and so forth, and Raytheon's really in those verticals that are very helpful for their growth. And we do expect that they'll be able to deliver 7% revenue growth, revenue growth is hard to come by right now. That helps them deliver on the bottom line. And they've been growing their dividend for the last 10 years at 12% a year.
But it's 20% off of the highs from last year. So I'm assuming that you're taking a very long-term view of the stock.
Yeah, absolutely. I mean, we recently got into this name. It's actually our probably most recent name, so we're buying in here off of those highs. I mean, they were up in 220. We loved the company, but it was a little richer there. And now we're entering it at this level in the 170s, 180s, and it's been, we like the company. We think it's it's at a good level to be buying today.
All right. Next is a name that many people have in their kitchen cupboard, and that is McCormick.
Yeah, I mean, we all see the spices in our cabinets. They're actually the leader in the branded spice market. They're the leader in the white label spice market. They're the leader in condiments. They're the leader in sauces and marinades. They're the leader globally as well as domestically. They also sell to companies like McDonald's and Yum. And, they're really just at PepsiCo. They're really in everything. They have 1,500 suppliers, 14,000 raw materials. The business could never be replicated by anyone else. They've been growing their dividends at 9%. They've got great, consistent margins. It's a beautiful business, and there's no way anyone else could really come in with all the things that go into it to disrupt it.
All right. Next is kind of a healthcare play, but in a different way. Cerner. Why do you like it?
Yeah, I mean, healthcare costs have been skyrocketing. We all know that. You were just talking about sort of wages and that being an issue, and drug prices are an issue. And this is a company that actually helps to lower the cost structure in the healthcare market. It's a healthcare IT firm. It deals with electronic health records. It also deals with a lot of data, mining the data to try and figure out ways to become better and more efficient healthcare companies. They're the leader in the business. They've been founder-run for a long time, but there was a deal recently made with an activist investor to really kind of increase the capital allocation plan and the margins, and that's a positive for the stock. They just put in their first dividend, and we really like this company. They got a great product. They've been building this product themselves rather than putting it together, and so they've got a great product on the market too.
On that note, Matt, thank you so much. Matt Roddy with Rockland Trust.